In other news, Nigeria's economy grew by 4.23% in the second quarter of 2025, according to fresh data from the National Bureau of Statistics. The growth was driven by a rebound in oil production, which averaged 1.68 million barrels per day, the highest quarterly output since 2022 and enough to meet the country's OPEC quota. The oil sector grew by 20.46% year-on-year, contributing 4.05% to GDP, up from 3.51% a year earlier. The non-oil sector also expanded by 3.64%, boosted by agriculture, telecoms, real estate, finance, trade, construction, and power. By sector share, industry contributed 17.3%, agriculture 19.9%, and services 56.6% to total output. Overall, nominal GDP rose to 100.7 trillion naira, a year-on-year increase of 19% from 84.8 trillion naira in the second quarter of 2024. Now joining us in the studio to discuss this is an economist, Abraham Tarfa. Good evening and thank you for joining us on the News Hour.
Good evening, thank you very much.
Okay, so is Nigeria's 4.23% GDP growth truly sustainable, or is it just riding on the oil rebound?
First of all, it's good news that our economy grew by 4.23 in this second quarter of 2025, but aside the contribution of oil to the growth, non-oil sector also contributed. So I know the way the news was reported, it seemed as if oil sector had the largest growth. But the reality is that non-oil sector still contributed a lot to the growth of the GDP that we see, especially when you look at it in terms of sectors. Every sector, agriculture, telecoms, energy, or ICT, all grew. The only one that did not grow when you compare Q2 of 2025 to Q2 of 2024 is trade. And even at trade, we'll see that generally, aside trade, services, financial sector, and insurance, all sectors grew, including the oil sector. So rather than putting the credit on just oil sector and our ability to meet OPEC's quota, let us remember that the growth was fueled by both non-oil and oil contribution to the GDP. It's important that the non-oil sector, we're able to meet OPEC quota, but the point I'm trying to make is that beyond oil, the growth was also, you can see that the growth was explained by non-oil contribution to the GDP as well.
Mm-hmm. So with services now making up over half of the GDP, is Nigeria becoming too reliant on this sector?
The reality is that our economy is diversifying. Remember, part of the statistical calculation that helped the growth to be visible was the rebasing of our GDP that moved our base year from 2010 to 2019. So what we see is that the growth, like I said earlier, that is explained by oil and non-oil sector is being driven by all sectors of the economies. So Nigerian economy is becoming more diversified, and each sector is beginning to have very impactful impact, if I can use that language, on the growth of the economy. So services is growing. However, it's still important that we have to understand that what fuel services is access to PMS, to diesel, the cost of transportation, the ability of people in hospitality business to go to work, the essential services to meet transportation costs. So this addressing all these costs that make people in the service sector, including people in journalism, hospitality, name it, is transportation costs, energy costs that fuels the ability to deliver. So you don't have a situation whereby optimal service sector delivery that's supposed to operate 24 hours begins to rationalize between rationalized in terms of being live and not being live because of the cost of diesel or PMS or transportation of its staff to get to work and to be on the ground for 24 hours.
So the economy grew by 19% in value. Is that real progress or just inflation in disguise?
Yeah, generally when GDP growth is computed in this nature, it's normally nominal GDP that is reported. Yes, the economy grew by 4.23%, but in terms of our GDP, the overall size shows that our nominal GDP grew from 89 something trillion to about 100 and something trillion. So that growth, it's not adjusted for inflation yet. So it just tells you the nominal GDP. That tells you the size of our economic growth in terms of naira and kobo. But the real GDP growth rate, which is 4.23%, is the one that's adjusted for GDP for every adjustment that needs to be that would have been taken into recognition. So in other words, that growth is a growth that reflects the effort of the present administration to see that our economy, in terms of macroeconomic indicators, in addition to inflation that's already assuming a downward trend, also have GDP growing to maintain a positive trend as well.
So finally, what's the smartest way to cut oil dependence without stalling growth?
Diversify. Adjust the cost of input costs that makes other services, that makes the positive growth we see in real GDP and the decline in inflation not being able to translate to poverty reduction. So address the cost of transportation, cost of access to energy, cost of access to electricity, cost of access to basic services like water and sanitation. I must inform you that even though the water and sanitation sector grew from 0.42% in 2024 Q2 to 0.44% in 2025 Q2, overall growing by 10%, we still have a situation whereby both the federal government and state government have one of the least allocation to water, sanitation, and hygiene. And this kind of allocation is important to addressing challenges like health and cholera and poor access to sanitation that worsens health outcomes and then lead to out-of-school children and then just compound our poverty situation. So growth is good, inflation trend is also declining, but we must accompany these policies or these macroeconomic good indicators by social safety net programs or pro-poor programs so that increase in growth and reduction in inflation will translate to poverty reduction.
Thank you so much, Abraham Tafa, for joining us tonight.
Thank you very much.